All right, ladies and gentlemen, welcome to the meetup, M2M Pro Live's first weekly discussion where we're actually going to bring up hot topics and then talk about what we're doing to prevent or mitigate anything in the market right now. All right, with that being said, let's continue. Once again, welcome to the discussion. My name is Michael Ford, co-founder of Millennials to Millionaires, where I've been successfully trading for over 12 years. I have made several investments and helped lots of people while serving in the military full time. And I didn't want to keep working paycheck to paycheck, so I started investing. A lot of you already know this stuff, so I'm actually going to kind of bypass it. Please feel free to look at my bio on M2M Academy if you want. But why are we here today? Today's topic is why we love the recession and you should too. Today's breakdown is going to be as follows. The first thing we're going to cover is the silver lining, a quick overview to the benefits of an impending recession as it pertains to the market. A lot of people always, say recession, and I mean, there is a lot of bad things going on with the recession. I mean, people are losing jobs and so forth. But we're going to actually try to switch your way of thinking so that there is a better way on the other side of the recession. Next, we're going to talk about when should you prepare for a recession and how you can decipher false prophets because you have to make sure the timing it right. You're timing it right. Third, we're going to cover calling versus shorting. We're going to recap what these concepts are and see how they are best utilized during a recession. Then we're going to talk about industries to focus on because when you talk about industries to focus on, we're talking about we know what's happening, but we don't know where to look because when there's a recession, where should we look at as far as after this recession's over? So we're going to actually touch on a couple of those for you today as well. And then we're going to brace for impact because once it actually hits, we want to show you how to diversify your portfolio to prepare for the worst impacts of the recession. And finally, we're going to talk about a guide to use in rebounding after recession as the economy makes a strong reversal in the art of resilience. All right, so here we go. Breaking down some numbers for you. The silver lining. Let's look at the bright side. Although a recession has tons of negative impacts across the economy on a global scale, there is a silver lining. Since 2009, there have been 27,900 online and brick and mortar small businesses that emerged from the collapse, according to the Small Business Administration. In addition, there was an average of 18% annual yield in subsequent years after the recession. That's huge, right? And then finally, we can see that there were 12 million new investors that began trading since 2010. And if you want to actually look over to the right, we actually have fool.com up there. There's an article entitled, Yes, the stock market will probably go lower, but here's why you should invest anyway. I'm telling you, there's a lot of great articles there. And then in the bottom left corner, you'll see that I placed the three websites that we got the statistics from: macrotrends.net, SBA.gov, and DQYDJ.com. Feel free to look at those and get some more stats because once you figure out the numbers and figure out where is best fit to put your money, then it'll position you in a better light after this recession is hit. And speaking of that, timing it right. When should you even prepare for a recession? A lot of people tell me they prepared a year ago or 2 years ago. I mean, there's a lot of people out there that think they know what's going on, but to be honest, none of us actually know. But we know that there's ways that you can find out. Research is key. Don't simply wait for the information to come to you. Be proactive and look for irrefutable data, always starting with your own financial broker and work your way backwards. All that means is pretty much if you were with TD Ameritrade, E-Trade, and you have you're enabled to look up financial reports, I would start there. And then authenticate that report. You want to authenticate your reports that you find because you don't want to just say, oh, well, Mike told me that Chevron's going down because the oil crisis or something like that. You have to authenticate that information. So once you find these financial reports and financial data that supports your recession, try to find at least two more sources to support your claim. And what I'm talking about is like specific stocks, specific entities. If you think that you know that 7-Eleven is one of those companies that's just going to outweigh or outweather the storm, then look it up. Try to find out if their information is valid and authenticated. And then avoid unsubstantial open sources because bloggers and opinionated news sources, hell, I would say M to M, but you have to make sure that you can back that stuff up. So whenever we give out information in these discussions, we want to make sure people are able to go research it. And timing is everything, so don't waste it. All right. I'm pretty sure you have questions at this point, and I want you to start fielding those questions now because this is the time where we're going to answer any questions about what you think is hot, what do you think is what we should be looking at or not looking at, right? And how we do that is calling versus shorting, right? We want to find out recession repellent stocks. All right. I know that's a mouthful right there, but find recession resistant companies like Amazon and place them in your portfolio for a call hold position. What does that mean? Amazon has not faltered since we've been in this event right now. You know, Amazon has been one of the forefront companies right now that are helping us get through what we're doing. Also, medical companies, right? There's a lot of medical companies. There's places that make respiratory machines and things like that. Those are going to be the recession repellent companies in this era, in our time frame right now. So if you're going to look at something, I would focus your attention on areas that are still booming right now while we're in this impending recession. Next, all the way up, start making a list of solid companies that are going to be on the rebound and then set up long calls. So, what I mean by long calls is I want to say that you want something that you don't necessarily need capital gain right away. You can wait a year or two. Um, I would suggest probably waiting 3 to 5 years so that you get a lot more return on your investment. But some people want the money now. I would say 6 months to 9 months is probably a good long call for you. But you can always go further out or closer in. But mind you, if you go closer in, that's a short call, and you gotta hopefully have something that's going to be going all the way up if you're going to get a short call, if that makes sense. All right, down with the ship. Invest in stocks that are going down right now due to the recession or the virus. And what you're going to do is you're going to short these stocks or options. All right, you're going to short them. The best application out there that I can see right now is MetaTrader 4, but there's several different applications out there that allow you to short stocks and options. But then there are also a lot of them that don't let you do that. So make sure if you are going to short a stock or option that it is allowed on your platform. Okay, so you can do research to find out if your platform allows you to do that. All right. And then lastly, I would say longhorns and bear claws. It was brought to my attention about the bulls and bearish, and I've been investing for over 12 years. Bulls strike up, bears strike down. Diversify your portfolio with both short puts and long calls to maximize your profit. If you have an investment portfolio right now, you should have some short puts, pretty much saying I'm betting that the market will go down, but make it short though, because this is not going to last forever. All right, people, it's not going to last forever. And then you want to do some long calls. And long calls are pretty much like we just said in the previous section. You want to make sure you have some type of capital investment for the long haul. Okay. All right, next we're going to talk about the industries to focus on. What do we keep an eye out for? So we had to actually take a step and a page out of history to actually see what happened in this last 10 years. So after the Great Recession of 2008, several new companies emerged across several industries. But most notably, we saw the emergence of companies like Uber and Lyft, which heavily affected, if not decimated, the taxi industry. Other social media companies like Snapchat, WhatsApp, Twitter were at the forefront of social media. I mean, now it's like a normal thing just to open your phone and see all of these apps. But 10 years ago, these weren't there. These were spurred out of the last recession. But also, at the same instant, companies like Zoom, Slack, and a host of other online professional service apps were unveiled. So the question is, what will come out of this current situation? And who is unscathed during all of it? So we talked about Amazon being one, probably Facebook, Zoom, the online companies. Let's try to figure out some other companies. If you are in the chat, I want you to think of type out three companies you think are possibly going to come unscathed from this event that we're going through right now. And like I said, I don't have all of the groups up on this one computer. So if you put a question or a comment in there and I haven't responded, it's possibly because I'm using the M to Millionaires main page and you're probably in one of the group pages. Okay. No worries though. I got you. So yeah, definitely think of three companies that you think are going to be either unscathed or they're new companies sprouting up right now that people are using. Okay. And then this is the bad news. We have to brace for impact. Oh, good. You said McDonald's, Amazon, perfect, Kay. Yes, those are definitely those are definitely in there. Especially any type of fast food restaurant. I mean, you can't sit down in a restaurant right now, and a lot of restaurants are failing because of it. So, bracing for impact. Taking a page out of the history books, we can prepare for the worst case scenarios. In 2008, the housing market. Well, now it's known as the Great Recession. The housing market took a big hit as foreclosures and a plummeting market took foothold as a key catalyst to this recession that we had in 2008. Yes, grocery stores definitely, Kay. Definitely. Then we look over at 2009. Small businesses. I mean, the impact of this past recession made a great toll on small business owners. Approximately 170,000 in the U.S. closed between 2008 and 2010, according to an article in the Harvard Business Review. That is crazy to think about. Then we jump forward to 2019, where CEOs were jumping ship. Now, is it just a mere coincidence that 219 CEOs and board members abdicated their position just months after the markets were tanking, or just months before the markets tanked? I'm just saying, you gotta, if we have to look with a different set of eyes to see what's really going on, right? 2020, the virus attacks. Now, even though the virus actually started in late 2019, it didn't reach United States until 2020. And a global pandemic known as the COVID-19, aka coronavirus, has decimated the way of life as we know it. The markets reach all time lows in mere weeks of reaching the US. I don't know if you guys were following the news just what 2, 3 weeks ago when we first found the large numbers that happened in the US. I mean, the markets just tanked. So that is what we're talking about, just bracing for impact. See how, if you know that it's happening, how can you better prepare? Well, this is how. The art of resilience. Be undeniably resilient. No marketing effort or social media buzzword can be substitute for that. So, these are four tenets that we try to live by. Stay positive. A negative account will do you no good. So stay positive and invest only 1% to be safe. What does that mean? What I mean is Don't make uh, don't make the foolish judgment call that I did if you when I first started out and I started with $500 and put the whole $500 into one company. I would definitely advise against that. I would say to diversify your portfolio. Make sure if you're going to invest and you're not certain of your investment, do not put all your eggs in one basket. Okay. Next, be encouraging. If you have shares in a company, let it be a company you could be a part of and you're accustomed to. If Kayla goes to McDonald's daily, then how about you invest in McDonald's? Just saying. If you go to Cabela's and you like Cabela's, invest in Cabela's. What I want you to do is if you did grab a sheet of paper and a pen, I want you to, or on your phone, go ahead and put in your notes 10 companies that you deal with all the time. And I mean, definitely right now, okay? Right now, you dealing with certain companies that are keeping you alive, keeping you good. So I want you to go ahead and come up with a list. You don't have to share it. Just come up with a list of 10 companies. And then what you're going to do is you're going to take those 10 companies, you're going to Google them to see if they're publicly traded companies. Eliminate any of the companies that are not publicly traded. Okay, if they're not publicly traded, you can't really help them. You can still buy their stuff and help them, but I mean, you can't necessarily buy stock in them, buy shares. All right. Once you get your list down, I want you to go ahead and start researching those remaining companies. See what's affordable. See what you can do as far as your portfolio to add something to it. Now, this is a trick that I like to give out. A tip. If you find something like Amazon, but Amazon is almost $2,000 a share, look what Amazon uses instead. So maybe Amazon uses DHL and they use UPS. Check those two out. Maybe they're more affordable. You want to use companies that are linked to the success of your parent company. Okay, linked to the success of your parent company. So if Amazon or Apple is your parent company, look up AMD processors who make the processors inside of your iPhone. Okay, Intel Core, AMD. Now these are they're way more affordable than say Apple itself if you're just starting out. Okay. Next, search and rescue. Research publicly traded businesses and buy shares. I just said that, so that's perfect. Then stay connected. Join social groups like M2M Pro that you're in right now, hopefully, and then meet people who share your interests. Confirm any stance with multiple sources. All right. And I'm going to keep preaching that because just because somebody tells you something does not necessarily mean that is going to make you some money. All right. And in today's recap, that was quick, right? We talked about the silver lining. We talked about timing it right, calling versus shorting, industries to focus on, bracing for impact, and the art of resilience. If you do have any questions at this point, please put them in the chat so that I can fill those questions for you. If you've been looking up stuff and you don't know what you're doing, put those questions in the chat. I'll give it a few minutes. And then also, I want to give you some weekly resources. If you are investing and you are looking to research some more on statistics, anything that we talked about today, or if you're looking at buying something new. These are some definite resources that you can use.